Let's bring in now to talk about the chip space more broadly, top chip analyst, Bernstein, Stacey Rasgon. Welcome back. It's nice to see you. So
Good to be back.
I know it's too soon for you to talk about this company specifically, but at least it raises the issue of companies that are out there that want a piece of this AI pie. How should we be thinking about these newcomers relative to the heavyweights like NVIDIA?
Yeah. So there's a number of areas of competition for NVIDIA, which makes sense. It's an enormous potential opportunity, and all the dollars right now are flowing to NVIDIA. And you've got other merchant suppliers like AMD or even Intel. You have hyperscalers doing their own products, and then you have startups as well, right? And I think for a lot of the startups, it's difficult. They don't have scale. They don't have ecosystem, and if their pitch is, we have a chip that's better than NVIDIA, I think that's hard because. With every generation, NVIDIA has a chip that's better than NVIDIA, and they have the software and all the ecosystem support that goes with it. So I'm not going to comment on Cerebras, but they're doing some other things. I mean, clearly, they're going to try their best at this point. But in general, so far it's been a winner take all. And I've said this before, it seems like it's NVIDIA's game to lose, like more broadly.
Following claims from Barron's that China was attempting to support domestic AI chip makers and advising local businesses to steer clear of NVIDIA chips, NVIDIA saw a 2% decline on Friday and remained flat on Monday. 11% of NVIDIA's sales during the first half of the fiscal year, which ended in January, came from China. Last week, the stock of NVIDIA cleared many trendline entries. The 50-day moving average of the stock is 5% above. After increasing more than 4.6% this week, shares are now 14% below their split-adjusted all-time high of 140.76. So should you invest in NVIDIA stock right now? Investing in equities at the appropriate time will surely boost returns. It's difficult to determine whether to purchase or sell NVIDIA stock at this time, despite the company being the clear market leader. Investors may determine if NVIDIA stock is a good investment at this time by examining technical indicators and chart indications. Super Microcomputer, SNCI, a manufacturer of AI servers, began trading on a split-adjusted basis on Tuesday. In August, the business revealed the 10-for-1 stock split in its fourth quarter earnings report. A stock split increases the number of shares in circulation, but leaves the business's market capitalization unchanged. The consulting firm Bain predicted that the overall addressable market for artificial intelligence software and technology will increase by 40% to 55% over the course of the next 3 years, which caused shares to rise on Wednesday. Compared to 1.5 million H100 units in 2023, 3 million GB200 graphics processor units are anticipated to be in demand by 2026 from NVIDIA. Barron's reports that NVIDIA lost its position as the top-performing S&P 500 stock of the year last week. As of last Monday's closing price, Vistra had risen 190% year-to-date, while NVIDIA had gained 135%. However, NVIDIA's stock price increased on Monday on the announcement that the massive Chinese e-commerce company Alibaba will work with NVIDIA to advance autonomous driving technologies for Chinese electric vehicle manufacturers, some of which are Tesla's competitors. NVIDIA's drive technology for autonomous vehicles is now linked with Alibaba's large language model portfolio. Melius research analysts offered the stock a buy rating and a price target of 165 on Monday of last week, citing the company's impending increase in Blackwell chip production in the fourth quarter. A stock market surge may be sparked by analysts projecting higher profits for the company for the entire year. There is a strong sense that some significant gains could be forthcoming when these companies are also close to buy points from appropriate bases. Analyst profit predictions for NVIDIA are rising as the company approaches buy thresholds, according to the Stock Screener's Rising Profit Predictions feature. NVIDIA is getting close to the newest trendline entry, which is located at 127.50, following 5 quarters of robust revenue and earnings growth. Since taking back control of the 50-day moving average last Tuesday, the stock has moved beyond a number of early entry. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates now. Back to today's video.
Trade it with Tom White, the co-host of Fast Market. So Tom, Francisco says 36% upside for NVIDIA. It's only off about 14% from its high, so hitting new highs according to him. What's your example trade for NVIDIA, which is under pressure today, off about 1%?
Yeah, the overall market under pressure today, dragging down some of these names that were higher earlier in the pre-market. But looking at NVIDIA, I looked at a strategy using the option market. You get a lot more leverage there after it's pulled back from those all-time highs. Still continuing to make higher lows, or lower highs, excuse me. So I looked at a strategy that gives me some duration. Let this play out a little bit, maybe capture another earnings event. So I went out to the December monthly cycle, so 80 days to expiration. And I did a complex three-legged spread here where I can offset some of the costs, lower my break even, while still taking advantage of some upside in the shares. So I looked at selling the 115 strike put. That's about $5 out of the money to the downside to help finance the purchase. I'm going to buy the 120 strike call in December and sell the 135 strike call. So buying a bullish $15 wide call vertical, financed by selling that out of the money 115 strike put. You're collecting a credit of about $2.30. It's actually a little bit more than that right now. But by collecting a credit on this three-legged spread, it takes my break even all the way down to 112.70 over the next 80 days. That's about 6.5% below the current share price in there. So I'm giving myself that nice cushion. Now, if it stays between that break even point and up to the 120 strike, I just get to keep that credit that I collected. But you can see the profitability starts to ramp up above 120 in the midst of that $15 wide bullish call vertical. Now, you're topped out on your gains, but by selling that 135 call against your long 120 strike call, you're offsetting a lot of the costs on that bullish call by doing the vertical as opposed to just buying the call outright, and that allows you to collect that credit. So this might be the way to play it. If it does fall below 115 at expiration over the next 80 days here, Caroline, then you're going to have to own the shares if you keep that short put open. So you got to keep that in mind. A lot of risk to the downside, but you've got to be willing to buy the stock there if you hold that short put through expiration.
Earlier this week, NVIDIA shares experienced a wild ride. A story claiming China was ordering local AI developers to use only chips manufactured in China for their products caused shares to drop. This is unfortunate for NVIDIA as China is a significant market for their products. $6.1 billion in sales to China made up around 11% of the company's first half earnings. However, NVIDIA made up for its losses as the story's intensity looked to diminish. It ended September 1.7% higher and the third quarter 1.7% lower. Since reaching their 52-week high of $140.76 on June 20, they have decreased by 13.7%. Even still, NVIDIA's stock has gained 145.2% so far this year, ranking second among S&P 500 gainers in 2024 behind only energy company Vistra's 207.7% gain. While that's a significant increase, NVIDIA has already increased by 184% by early 2024. As much of the frothiness in many chip and technology stocks has evaporated, the stock has dropped back. It is a truth that the United States' relationship with the People's Republic of China is complex. These two enormous economic powers have started fresh stimulus programs. A 2022 Biden administration rule prohibits NVIDIA from selling its most potent goods to China, including the H100 graphics processing units. Similar to the Trump administration, this one has been suspicious of China's interest in U.S. technology. In the meantime, the Chinese government is keen to encourage its advanced and quickly expanding technological industry. With Taiwan serving as a major hub, its desire to seize control of the entire South China Sea is evident. However, NVIDIA is permitted to market its less potent goods in China. NVIDIA's chips and powerful GPUs, especially the H100 GPUs, are making their way to the Chinese mainland despite the export limitations. The next-generation Blackwell chips from NVIDIA are in high demand, even though they haven't been introduced yet. The New York Times and Wall Street Journal have reported on how vibrant player communities are actively sourcing NVIDIA's most potent GPUs and transporting them to China. Forming businesses outside of China to purchase and transport the GPUs to the mainland could be a simple way to achieve this. Perhaps a Chinese student studying in Singapore packs some units in a luggage that escapes scrutiny before returning home for vacation. Alternatively, a business will be established to construct data centers outside of China using NVIDIA hardware and software, enabling mainland clients to access the computational capacity of these facilities. Even wholesalers claim to be able to obtain the chips on the internet, but it's unknown where they obtain their supplies. Normally, NVIDIA distributes its GPUs and related goods to other businesses, including Dell Technologies, who uses them to install them in server computers and other connected goods. The flow of goods and services might just be temporary because China encourages domestic manufacturers of chips that can perform tasks that NVIDIA's products can. So what does this really mean for NVIDIA's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Okay, and just clarify, you said 20% upside for AMD. How much upside for NVIDIA from here?
For NVIDIA, we're looking at a little bit more, about 36%.
On tech stocks as we begin the fourth quarter, can we see leadership out of tech once again?
I believe so. I believe the opportunities, especially in the AI space, have not been fully priced yet. We're looking at a new revolution here. We got to go back maybe when Google first started out and so on to see one of these kinds of inflection points. So these don't happen all that often, and it's really a consequence of how the internet has evolved, right? We went from gathering, collecting a lot of data to doing what with the data. So now we can, AI offers an opportunity to do many great productive things with the data. So we're just seeing the beginning of it.
All right, so tech can lead the overall market higher. Is it chips, semiconductors that lead the overall tech sector higher?
I believe so. I believe within the AI revolution, you have to start with the infrastructure first. And if you go that route, then of course you have NVIDIA in the lead, and you have AMD a distant second, but playing second fiddle to NVIDIA is not a bad thing. It's not a bad place to be. And also, it's basically the chips, that definitely lead.
Okay, we'll talk about both of those, but you talk about the AI revolution not being priced into the overall space, but want to get more specific because NVIDIA is up 144% year to date. It is 14% or so away from its highs, but I guess the question is, can it live up to its own, lofty expectations?
I believe so. I mean, even within those lofty expectations, they're allowed to have a bad quarter or two. I mean, it doesn't negate the bigger long-term picture. The fact of the matter is that the AI market and the demand for those kinds of chips and services is targeted in the trillions of dollars from here into 2030. So we're just seeing the beginning of that. So and then also, if you look at the valuations of some of these companies, especially like NVIDIA and AMD, we like to look at the PEG ratio. What you just take your PE ratio for the next 12 months and adjust it for growth, and you can see they're actually pretty cheap. So there's a lot more to go there, and we'll see where that leads.
The most influential stakeholder groups in NVIDIA Corporation should be known to all investors. Institutions own the greatest number of shares in the corporation at 66%. Institutional ownership typically carries a lot of weight, especially when it comes to individual investors because of the vast resources and research capabilities at their disposal. As a result, having a large amount of institutional money invested in a company is often regarded as a positive attribute. Institutional investors sometimes compare their returns to those of a widely followed index. As a result, they typically think about purchasing larger businesses that are represented in the pertinent benchmark index. Institutions are already listed on the share registry for NVIDIA, They do, in fact, hold a respectable portion of the business. This implies a certain level of credibility with experienced investors. However, since institutions, like everyone else, occasionally make poor investment decisions, we cannot rely only on that fact. A rapid decline in the share price may occur if several institutions have simultaneous changes in their opinions about a particular stock. For this reason, it's worthwhile to review NVIDIA's financial history below. The future is, after all, what counts most. Investors should be aware that institutions actually own over half of the business, giving them a substantial amount of combined influence. There aren't many NVIDIA shares owned by hedge funds. With 8.7% of all outstanding shares, the Vanguard Group, Incorporated is the largest shareholder according to our data. In the meantime, the shares that are outstanding are held by the second and third largest shareholders, respectively, at 7.5% and 4%. Furthermore, we discovered that the CEO, Jensen Huang, is the owner of 3.5% of the shares. According to our research, fewer than half of the company's shares are held by the top 25 shareholders combined, indicating that there is no dominating shareholder and that the company's shares are widely distributed. Researching a company's institutional ownership can be valuable, but it's also a good idea to look into analyst recommendations to have a better understanding of a stock's predicted performance. Given the number of analysts covering the stock, it could be helpful to learn about their collective outlook for the company. Though the exact definition of an insider can vary, board members are nearly universally regarded as insiders. The board ultimately answers to management. However, managers frequently sit on executive boards, especially in the case of founders or CEOs. Insider ownership is often regarded as beneficial. Sometimes, though, it makes it harder for other shareholders to hold the board members responsible for their judgments. According to our most current data, insiders do hold some NVIDIA Corporation stock. Insiders own a substantial stake of $117 billion. Occasionally, we are curious about their transactions. Public ownership in general. The general public, which is primarily made up of individual investors, has some influence over NVIDIA because they own 30% of the company. They can nevertheless have a collective influence on business decisions, even when their ownership stake may not be sufficient to influence a policy choice in their favor.